The Euromoney Group recently organized its Nigerian Banking and Capital Market Conference 2013 in Lagos. To speak further on the conference was Mr. Christopher Garnett, Director, Euromoney.
In comparison with other African markets, I would say not only has Nigeria got a chance, I would say that Nigeria in the medium term is an absolute one-way bet. There'll be short-term volatility along the way, but the combination of population, by which I mean both the simple quantum of the population, the number of people here, the fact that if there are 170 million Nigerians, as a sort of rough estimate, it seems to me that about 169 million of them spend all day long buying and selling things. That's a very good thing. There's a kind of commercial and entrepreneurial dynamism which you don't see in other countries in the world, and it sounds like a boast, but it's not an idle one, and it's relevant to what I'm saying. I've been to 107 countries doing this job, and rarely have I come across anywhere where the entrepreneurial and trading and commercial instincts are so finely developed. So population in terms of the spirit and flair of the population for business, but also, of course, simply in terms of the number of people, as I say, the quantum of the population. It's a huge market for goods and services of every description. As the middle class begins to develop further and becomes more affluent, obviously more and more international companies will want to come here and use it as a basis for manufacturing and commercializing their goods and services, and it is a one-way bet.
The conference created a platform for engaging discussions on capital markets development, industrialization, financing, and also sustainable economic transformation.
So first we'd like to ask you about the Euromoney Conference, the whole concept and what inspires you coming to Nigeria to host it.
Okay, well, this Euromoney Conference is no exception. We like to think of as a meeting place for buyers and sellers of capital. We don't want to have dry academic discussion of economic matters and developmental matters. Instead, we want to have lively, interesting, sometimes controversial, sometimes even antagonistic discussions about how to get capital moving in a market. And that's what we're doing here. Why Nigeria? Well, Nigeria is one of the most exciting economies in the world at the moment, but it's also one of the economies that has the most visible and obvious challenges, which we're here to interrogate and to question and to look at government policy and private sector policy and how people are going to come to terms with those challenges. And take this country, by the way, as the last panel we resoundingly agreed was a possibility, take this country deep into double-digit economic growth within the next few years.
And so far, what has the response been like in terms of the public-private sector partnership and engagement?
I think that you can take a look at the public sector engagement by looking at Dr. Kingsley's intervention this morning. First thing this morning, he came and spoke. He gave some prepared remarks, and then he spoke very interestingly and persuasively off the cuff about some of the initiatives that the Central Bank of Nigeria has to get money flowing, for example, into the agricultural sector. I mean, I can't praise his entire intervention, but he spoke very, very well, and that's a good example of how the public sector is engaged with these questions. As far as the private sector is concerned, we had an investment banker, a commercial banker, a private equity player on our panel this morning. All of them have exciting new ideas about how to get capital moving, and I think that there is certainly no lack of dynamism in the Nigerian private sector.
Now, since this is about the Nigerian Banking and Capital Market Conference, of course, the whole globe revolves around whatever happens in the U.S. And since the morning, Mr. Bernanke, in his address on the global market, said the U.S. will hold on to its bond reserve and also tighten its policy. What does that mean to Nigerian markets and to other markets across the world?
Well, I think what it means to Nigerian markets is pretty much what it means to everybody, which is another shot across the bows of easy money. Personally, I think that Bernanke has played this really rather well over the last 6 months. A lot of people say that when he made his initial remarks in the spring, which caused the so-called taper terror, and people, bond yields shot up, everybody got very panicky. People say that he lost his nerve. He was going to stop the asset purchase program. I don't think personally that was ever his intention. It's extremely immodest of me to try and guess the mind of the world central banker, but the way I see it, what he did was a pretty subtle and nuanced way of getting people used to the fact that unorthodox monetary policy would eventually come to an end without actually having to do anything. So he didn't need to put the brakes on, but he told people that the brakes were there. And yesterday he's just reminded them again. So I think he's actually playing his cards pretty well, and the rest of the world clearly does benefit from that. Eventually, asset purchases will taper, will end. Interest rates will go up. But anybody who doesn't think that that's going to happen is obviously crazy. It's only a question of when. I think he's preparing the ground rather well. Of course, his term comes to an end quite soon, and there's a lot of speculation about who his successor might be. But in terms of what we see in the newspapers and from commentators generally, there doesn't seem to be much suggestion that the new chairman of the Fed will take a radically different line from what we've seen with Mr Bernanke. So business as usual, up to a point.